Hey, hi, good morning, everyone. Thanks for joining. We will wait another 2 minutes and then we will start. And we will roughly take about 1 hour overall to complete our session. Okay, so let's wait for another minute or so. All right, so we can start now. I think we are already 11:33, so we'll begin. And as you're already aware, we'll be going through in detail about understanding corporate NPS and why we call it as a powerful, payroll benefit for someone to save taxes. Uh, Before that, a quick introduction about me. My name is Amit, and I am a co-founder and CEO at Floater Wealth. We are a company based in Bangalore, and what we do is we work with corporates and engage with employees to help them in their overall financial planning and investment. So we call it as a 360 framework for financial wellness at workplace. So corporate NPS is one of our leading product that we help corporates to implement and also help employees to work with their financial planning, investment across mutual fund, NPS, and also to look at their financial security from health insurance and life insurance point of view. And we have been a leading corporate NPS provider for the last 3 years. And we primarily work in the corporate sector to help employees and corporate to basically implement and manage their corporate NPS program. Here is a quick philosophy that we have, and NPS is actually a very good fit under this philosophy, and we call it as investment should happen before somebody starts spending their earning. So we call it save before you spend, right? And this is where NPS becomes one of the key product which helps you do that, because in this what happens, your investment is done by your company even before you get your salary, right? Which means that you are not worried about whether your investment has happened or not. Once you have become part of corporate NPS, your retirement saving continues without any break and without any intervention from the employee side, right? So with that philosophy, let's move on and look at the detailed topics which we will be covering. We will start with some of the fundamentals of NPS. Then we move on to the corporate NPS, and in this we will understand the taxation. We will understand one example. We'll take one example of illustration with the help of a salary structure, and we will see how the salary structure looks like before opting for corporate NPS and after opting for corporate NPS. So this will give you a very good idea about that how you can expect your salary after you have opted for your NPS. The next thing is that implementation and rollout. So this will help many of you who are from company HR and finance team, or maybe organization who are managing NPS for some or the other company, to understand about how to implement the whole process. And the next comes as cost and compliance related to NPS. What does it mean? That as a company, if you are implementing NPS, then you should be aware of any challenges related to cost, compliance, and operation, whether there is in any operational hassles or not. After this, we will go in detail about NPS, and this will be very helpful for you as an investor to understand how, as an investor, you can, opt for different flexibilities available within the NPS. And the most important aspect, how to make withdrawals from NPS and how to exit from NPS at the time of maturity. And finally, we will understand how you get pension from NPS if you have been investing for any number of years that you wish, right? So, and finally, we will stop for Q&A in the last maybe 10-15 minutes we'll spend on that. Okay. So during the session, if you come across any questions, please put it in the chat, and I'll be taking those at some point of time. So let's understand the fundamentals within NPS. To begin with, let us understand how the structure looks like, right? So because there are multiple stakeholders within the NPS ecosystem, so we'll understand that and see where do we as an investor stand, right? So the first and foremost, most important thing to understand is that NPS is a product which was launched by Government of India in 2009 for all the citizens of India. Before that, it started only for the government sector, but since 2009, it is available for everyone. And PFRDA is the regulatory authority. So within PFRDA, there is NPS Trust who manages the whole NPS overall ecosystem. After the regulator, we have fund managers who will be, investing our money across different asset classes, and all the money that we invest goes and sits in the trustee bank account, and the fund manager will access money from the trustee bank. Next comes the most important stakeholder in the whole ecosystem is called Central Record Keeping Agency. What does it mean? As the name suggests, this is the agency which actually handles every data that flows through the system. They are the responsible entity to give you the statement. They are the responsible entity to collect your documents if you are onboarding. And tomorrow, any kind of withdrawal, closure, all those things has to be going through the CRA. And there are today 3 CRAs within the ecosystem: KFintech, Protean, and CAMS. Your account can be with any one of those, and it does not make any difference because overall everything remains same, just that you will be aligned to one of them. Okay, all of them have their own online platform to manage your NPS account. Next comes the POP. POP is full form is point of presence, and SP is service provider. Now, what is this entity is? This is kind of bridge between investor, if you are part of NPS, then between you and the CRA. So POP will be responsible to give all the services related to the NPS. So you will approach the POP if you have to open an account, or if you are a company who wants to implement corporate NPS for your company, then you will approach the POP, and the POP will help you set up all the program. We at Floater, we function as a POP service provider in partnership with one of the larger POP, which is ICICI Pension Fund. Okay. So beyond this is all of us whoever is investing in the NPS. Other basic information is about who can open an account, what should be your minimum age. So NPS ideally requires you to be an adult for opening your normal NPS account. And when I say normal NPS account, it means that there is some other account also, right? And that is called NPS account for minor, right? So all our discussion today is not about the minor account. It is about the adult account. Hence, I am giving you the detail that from 18 years till the age of 85, anybody can open an account. And once you're investing, you can continue to remain invested till the age of 85. So that is about eligibility to enter NPS and when you have to exit NPS. Next comes the lock-in period. Now, this is very interesting because till 6 months back, there used to be some lock-in period in NPS that was for 5 years, but that lock-in period has now been made zero. That means if you start investment in NPS, you can actually exit from NPS anytime without waiting for any specified number of years. What is vesting period? This is the time when your NPS account will mature, right? So if you compare it with PPF, for example, so PPF again, similarly, you have 15 year of a lock-in period, and then after 15 years, you can your PPF account matures. So on a similar terms, if you look at this NPS, here also after 15 years, your NPS account will mature, which means you are eligible to exit from NPS in a normal condition. Before 15 years, if you want to exit, since there is no lock-in period, so you are free to do that anytime after opening an account. So what it also tells that since 15 year is the maturity period, so you can very well use NPS as a source of second income after 15 years of your account opening. So let us say you are just getting into your first job, you are 24, 25 or something, and you start your NPS investment regularly every month, either through personal investment or through corporate investment. So at the age of 40 or 41, right, you will have a choice to close your NPS account and maybe start your second income as a pension, right? But if you don't want to do that, maybe you want to continue till the age of 60 or 65 or 70, all those options are also available. Quickly about what is NPS. So this is a market linked investment. That means whatever money you are investing will not give you any guaranteed returns. Your returns will vary based on how the market performs, stock market and debt market, right? So if you are looking at NPS as a fixed return kind of a product, then this is not for you. But since it is a long-term product, like it is expected that people will be invested for 10 year, 15 year, 30 year and all that, right? Till their retirement. So this works very well because in a longer term, stock market or debt market returns averages out and gives you a very healthy return. We will see how the performance has been in the past 10, 15 years. But yeah, overall, good to know that it is a market investment, very well, very similar to mutual fund in terms of how mutual fund invests your money in different kind of asset like stock market, gold, debt market, all that, right? Similarly, here also your money will be invested. But the good thing is that you can decide which scheme you want to invest. You can decide how much equity you want to invest, whether 100% or 0% equity. So that means if you are someone who does not want to take risk, can go for 0% equity also, right? So all those flexibilities are available for all the investors. How the taxation works. So this is about capital gains tax, which means whatever investment I am doing, right? Then at the time of maturity, I will have certain gains, which is called capital gains. The good thing from NPS with NPS is that this comes under exempt. What it means that you claim certain tax benefit at the time of investing. You again get tax benefit at the time of maturity, right? And even during the growth phase, any gains that you have never gets taxed, right? So you get exemption at the time of investment, during the growth, and at the time of maturity. Now, at the time of maturity, yes, 100% of your investment can be tax free also, depending upon what way you go and opt for the exit. So we will understand that while we discuss about the exit process. But yes, high level, NPS can give you zero taxation on the capital gains. This brings us to the second topic, which is probably the most important as per the name of the session, which is corporate NPS. So here we will understand how the corporate NPS works and why it makes sense, right? Why a company should include corporate NPS in their payroll structure. And now, since it is start of the financial year, probably it is most important for you to understand because if your company brings corporate NPS right now, you will be benefiting for the full financial year also. Looking at what is corporate NPS, so actually it is hardly different than the normal NPS because everything else remains same as a normal NPS. When I say normal NPS means the one which I can open as a person, as an individual, and start investing myself, right? So only difference in the corporate sector NPS is that your account will have an authorization that your company can also invest in the same account. Okay. So the same account which you have as an individual, your company can also invest on your behalf. Okay. So for that, your account should be under the corporate sector. And by that, what it means is that your account should be mapped to the company, right? So first thing is company should be offering NPS, then your account should be mapped to the company. Once that is done, your account is ready for corporate investment also. So your company can put money in that account, right? And why a company would do that, or why would you ask your company to invest on your behalf, is that because if the company is investing in your account, that full investment becomes tax free for you. Okay. Because if you personally invest, there is a limit. Plus, that is not available in both the tax regime, taxation benefit. But if your company is investing on your behalf, you will claim tax benefit in both the tax regime. And that brings us to the next important topic about taxation. Now, here, the section under which this tax benefit comes was known as 80CCD2 till last month, because the old Tax Act 1961 was there. Now, from this month onward, new Income Tax Act of 2025 has come into play, and now this section comes under 124. Okay, so the tax benefit on corporate NPS comes under section 124. So if you are referring to the income tax sections, please refer to 124 to know about this tax benefit. Now, this is the upper limit of your taxation benefit. If you are part of the old tax regime, then 10% of your basic salary is the maximum limit that your company can invest on your behalf, and you will claim full tax exemption. If you are in the new tax regime, this limit goes up to 14%. That means whatever is your basic plus DA, on top of that, 14% of that amount can be invested, and that amount will be tax free. So that's a substantial amount, right? I mean, that can be substantial amount depending on what is your salary. Now, there is a super upper cap also, which is of 7.5 lakhs, right? That means you cannot claim more than 7.5 lakhs of tax exemption under this section. And that 7.5 is defined as your company contribution to the PF plus corporate NPS contribution. So your company is investing, let us say 5,000 every month. So that is 60,000 for the year, right? So 7.5 lakhs minus 60,000 is for 5.9 lakhs, right? Sorry, 6.9 lakhs. So that is the limit for you in NPS. So this 7.5 lakhs will play a role for people whose basic salary is, let us say, more than 35 lakhs and all that. So somebody in a very high income group will probably hit this 7.5 lakhs of upper cap. Here we will be understanding the implementation of NPS in a salary structure, right? That if you include how it will work. So look at it from from an employee point of view, as well as look at it from an HR point of view also, if you are looking to implement NPS in your company. So let us take an example of a CTC breakup where basic HRA special allowance and employer PF is there. So here we have considered 12% of CTC as the employer PF, right? Sorry, 12% of basic. There is a mistake here. So 12% of basic is 15,000 as PF, and overall CTC is 2.5 lakhs, annually 30 lakhs. And let us assume your company also has something called flexible benefit, right? So in this, we normally see some components which are tax exempted, provided we claim against certain bills and all that, right? So let us assume you currently have mobile bill and food card as your tax exempt component, right? So here what is happening, when a company wants to include corporate NPS, that component will be added to the flexible benefit basket. You know, so here upper limit will be 14% of basic salary is what I'm showing here. But this 14% is applying only if you are going for new tax regime. If you are in old tax regime, your limit will be 10% only. So this is the salary structure of your company after implementing NPS. Now, when the payroll comes, salary slip, that means after you have selected the flexible benefit, what is happening here, if you can see, your 47,500 of special allowance is splitting. Corporate NPS is coming out of that, and your other mobile and food card declaration is also coming out from that. And your special allowance reduces to 20,000, right? So what I'm trying to show here is that if you are part of corporate NPS, your CTC does not change. Your CTC remains same, just that your special allowance gets readjusted. How much? By the amount of NPS that you declare. So in this, if you see, your gross was 235. Now your gross has become 207, right? That is 2,07,500. Why it is so? Because NPS and your other flexi benefit that you have declared has come out of that. And your overall remains still 30 lakhs. Okay. So this is how your salary will look like after you have opted for NPS. Okay. So what is the tax benefit that is coming here in this example? So I was showing an example of 30 lakhs of CTC. If you are not opting for the corporate NPS, your tax could be taxable income could be 26 lakhs 25,000. But since you have opted for corporate NPS, your taxable income has reduced to only 24 lakhs 15,000. And what does it mean? A total tax saving of 65,520 rupees. That means per month, around 5,460 is your tax benefit. Your TDS will reduce by that much. Okay. So I hope this helps you understand the impact of the tax benefit as well as how your salary slip may look like after you have become part of the corporate NPS. For the company, here it's important to understand that if you are bringing NPS as part of your payroll structure, cost to the company will not increase, so you don't have to worry about the cost. Now, this is a quick payslip comparison, how it will look like. So on the left hand, look at and after every deduction, that is PF, employee PF, employer PF, professional tax, if you are paid with professional taxes, then that deduction will also be there, and the TDS. Overall, your take home will be 1,87,950 rupees. Same thing when you become part of the corporate NPS, it will look like this, right? So if you see on the right hand side, deduction side, one more deduction has come, which is corporate NPS. And on the earning side also, corporate NPS shows up. And that 17,500 will be your deduction. And your TDS, if you see, has reduced from 31,850 to 26,390. And take home is 1,75,910. Now you might say, after becoming part of NPS, your take home has reduced. Yes, it is true, but you should also imagine that by reducing your take home, you're also ensuring that 17,500 is going for your retirement saving as well. And in that 17,500, 5,600 is your immediate benefit as taxation. So technically, you are investing 17,500, but it is costing you only about what? 12,000 rupees or so because of the tax benefit. So this is how salaries will look different after joining corporate NPS. Now, this is important for a company. If you are managing payroll of a company as a HR team or as a CA firm or HR outsourcing firm, then this is how the process works. It takes 3 days for you to roll out NPS for the employees. Imagine only 3 days. What is the process? Company first registers as NPS provider. Then company will receive a company code. HR will receive a dashboard access. And after that, employee onboarding can start. And employee onboarding and overall experience is totally digital, right? So this makes sure that, it can be rolled out at a quick time. And final step is that employee will go and declare the NPS option in their payroll, whichever is using. in that, under flexi benefit, you have to deliver interest to join corporate NPS and also mention how much percentage of your basic salary you want to contribute. Then comes cost, company, and operation. What is it for the company? So first thing I have already spoken about, that company should not worry about the cost because it does not cost anything to the company. CTC remains same. Second one is compliance requirement. So I'm sure any new initiative, if a company is taking, then compliance must be looked at. But the good thing is that you do not have to, handle any kind of new compliance because of the NPS. And is a liability on terms of what happens if tomorrow company leaves the job or all that, right? You're just acting indicator to help your employees to save tax. Because if you do not bring NPS to your payroll, this when claimed, sorry, by the employee, right? So it is kind of your responsibility for helping your employees to save taxes. Then coming to the date for depositing money, company can choose their date, flexible. It is not again part of any kind of a compliance in terms of any last date or cutoff date. You can choose any date that is comfortable based on your payroll timelines. And finally, coming to the operation, there is an unified platform, and from that platform, you get access as an HR team. You get access as a HR outsourcing team also, as an CA form team also, to manage all your company data related to NPS from one single platform. And everything is managed completely digital. Okay, starting from enrollment, then employee onboarding, then operation, and then monthly deposit of the funds. Everything is digital. So that brings us to the last topic, which is about NPS as a product. And this probably you have to look at it from an investor point of view, because if you are planning to be part of corporate NPS, you should understand how does it work, what are the things inside the NPS. First thing you should know, there are two type of NPS account, tier 1 and tier 2. But for all practical purposes related to your retirement planning, taxes and benefit, tier 1 is the account which you should be part of. And if you open an NPS account, you will by default open tier 1 account, because tier 1 is not something that you are mandated to open. And in most cases, you may not need it. But in future, if you want, you can open an NPS account in tier 2 also. But the problem with tier 2 account is any gains that is generated, even if you are investing for 5 years, 10 years, right? The gains will be taxable as of today's income tax law, right? But the only benefit, main benefit here is that you are able to withdraw money anytime, but probably it may not say make sense because any profit that you generate will be taxable. So corporate NPS investment can always only tier spoke about market linked investing, which is NPS, right? So it's important to understand for all of us that what are the options for me when it comes to the fund choices. So till 6 months back, there was only one choice, which is this, known as common scheme. In this, what happens as an individual, I will I will be personally allocating funds between equity, corporate debt, and government securities, which means that it is my personal choice to build my own portfolio based on how much risk I want to take with my portfolio. So only limitation here is that 75% can be the maximum equity exposure that you can opt for. So if you are someone who is looking for 100% equity, you cannot do that in common scheme. For that, we have another scheme which I will be discussing about. Now, once you are part of the common scheme, you also get an option to make changes to this asset allocation every year 4 times. Now, if you are someone who wants some of automated stuff, right, that you want to join common scheme, but you don't have to worry about making changes to your allocation based on your own judgment of how markets are performing and all that, right? So then you have an option to go for automatic choice. Under automatic choice, what happens? Your account asset allocation will be rebalanced every year starting from the age of 36. So till 35, it will remain whatever you start with, after 35, it will keep changing your equity exposure by reducing it by small percentage every year on your birthday. So this functions like an automatic, inbuilt asset allocation rebalancing of your portfolio. So what is the second option of fund? It is known as multiple scheme framework, introduced just 6 months back. Here what happens, you don't have to worry about choosing your asset allocation between equity and debt. You can directly just go and select one of the scheme available under different fund managers. Any scheme, plus more than one scheme also, right? So you can choose one scheme from, let us say, ICICI fund manager, one can be from HDFC fund manager, another can be from Tata fund manager. So you can build a portfolio with multiple of this. Plus, here you may find schemes where 100% equity exposures are also there. Plus, at the same time, here you may find a scheme which is more of balanced fund, right? Dynamically balancing equity exposure from, let's say, 40% to 80%, right? So balanced advantage kind of a fund, balanced multi-asset allocation fund can also be available here. So you can build a portfolio of, let us say, 3, 4 funds based on how you want to design your overall investment for the retirement. Here is a quick comparison. And one of the most important aspect you have to look at is that once you join one MSF scheme, you cannot move from there. That means you cannot switch from there to any another MSF scheme. However, you can switch from MSF scheme to the common scheme. So in future, for any reason, if you think that the MSF scheme which you have chosen is not performing as per your expectation, you have a choice of moving that money from MSF to the common scheme. Okay. So this is how it works. In both the schemes, vesting period remains 15 years. So nothing changes in terms of the design and structure of the NPS, but except for few things like you can get up to 100% equity exposure, you can get balanced fund, plus you can switch from MSF to common scheme, but you cannot switch from common scheme to MSF scheme. Also important thing that fund managers are free to invest money in equity from, across top 50 to 250 companies, which means that now overall investment can function like a large to mid cap investment. Yes, there are certain limitations like how much you can invest in the top 200, how much you can invest in the next 50, all that there are certain limits. But yes, fund managers have a choice to go up to top 250 companies, which means that potential of returns are also higher for all of us as an investor. Plus gold and silver investments are allowed, plus real estate investments are also allowed. So it is a complete, spread of diversification that is possible by the fund manager, and we can decide how we want to choose our schemes. You have 10 fund managers today, and you can choose your investment or choose your schemes between any one of this. It is personal choice. You are not mandated to select one fund manager over the others. Okay. Plus, if you're in common scheme, you can even make changes to your fund manager every year one time. Here is a quick look at last 10 years of return in NPS. Okay. So equity has given average return of about 13%, and the debt fund has given range of 7.6 to 0.28%. And if you compare it with the benchmark, they have been very close to the benchmark returns also. And this helps us get a reference that what kind of a, expectation I can have with NPS. Yes, old returns may not be repeated in future, but there is always a chance of getting better than this, because now the fund choices are, fund managers are allowed to invest in mid cap stocks also. Whereas earlier it was only more of a large cap oriented, top 100 companies was only allowed for investing. So, you can build your own expectation how you want to design your portfolio. NPS allows you partial withdrawal total 4 times during the life of your NPS account. First withdrawal can be done after 3 years. But important thing to understand, if you are investing through corporate NPS also, then the amount invested through the corporate does not qualify for partial withdrawal. Only your personal investment in NPS will be qualifying and allow you to do partial withdrawal up to 25% of your personal investment. And then there are about 8 to 9 reasons or purpose for which you can make partial withdrawal. Let us now talk about exiting corporate NPS, and this probably will be very important because this used to be one of the most, negative aspect that people thought we invest in NPS and need to wait till the age of 60 to complete our exit. Now there is no such requirement. Just there is a vesting period of 15 years. So let us understand before 15 years, if you withdraw, what happens? Or not withdraw, but I am talking about exit, means closing your NPS account in a way. So before 15 years, depending on how much is your fund balance, you will be withdrawing based on the allowed limit. If total fund balance is less than 5 lakhs, you can withdraw your full money and close your NPS account. If your total balance is more than 5 lakhs, you can withdraw 20%, and the 80% of the fund will be mandatorily converted into annuity. Annuity means pension. So from this 80% of your money, you have to start getting pension, right? And how to get pension, that I'll be talking about in next slides. But before that, let us understand after 15 years. So this is your normal exit from NPS. And if you exit after 15 years, again, fund balance will come into play. If your fund balance is less than 8 lakhs, full money you can withdraw. No need to go for pension. If the balance is between 8 lakhs to 12 lakhs, you can withdraw 6 lakhs immediately. And the balance 6 lakhs you can withdraw through systematic withdrawal in the next 6 years. So no need of annuity here also. Okay. So full withdrawal can be done, but only thing is that 6 lakhs immediately and the balance amount over the next 6 years. Now, for most practical purpose, this is the third one, which is most practically mostly it will apply to all of us because we are investing for a long period. In 15 years, our fund will be much, much higher than 12 lakhs. Okay. So here you have to understand that earlier only 40% was allowed as withdrawal. Now it is 20, earlier only 60% were allowed for withdrawal. Now we can withdraw up to 80%. Only 20% of the funds need to be converted into pension, or we have to purchase annuity from that 20% of the fund. Now, one important thing to understand here in across all the three areas, if you want pension from your 100% of the fund, that is also possible. Okay, so if you want 100% of the fund value to be converted into annuity, you can opt for it. There is no problem with that. In case of death, full money, that is full fund value, will be paid out to the nominee. Okay. Let us understand how the annuity works here. So I have been talking about 20% needs to be utilized for purchasing annuity. So when you go to exit from NPS, you will be required to select one of these insurance companies from whom you want your pension. You have your personal choice to select any one of this. Whoever is giving you higher pension or whichever company you trust more, select based on your own preference. And along with that, select one of the option of pension. So there can be single life pension and there can be joint life pension also. Single life probably means mostly means that you need pension only for yourself, and after your death, pension does not need to continue to your spouse. And in joint life, it is like continuing to the spouse also. Now, to understand the annuity better, we will take an example. Okay. So this example is for a corpus of 5 crores. So let us say you have been investing for 15 year, 20 year, 30 year, and your corpus has reached 5 crores. Okay. And you have completed 15 years also. So that means you can go for normal exit. So let us say I am choosing to withdraw 40% sorry, 60% of the total fund. Even though I am allowed 80%, I am choosing to withdraw only 60%. So I will withdraw 3 crores without paying any tax on that. Okay. And why I am saying 60 instead of 80 is because though the 60% limit has increased to 80%, currently the income tax reform has not introduced zero taxation on that extra 20%. So, to keep the example in a way that taxation is zero, I am taking an example of 60% withdrawal. So, balance 2 crore, I am choosing LIC for my pension. And I am also choosing joint life with ROP, means return of purchase price or return of premium. Let us say LIC tells me that they will pay me pension at the rate of 6.5% per annum. That means I will receive 1.08 lakhs per month as my pension. This will continue to my spouse after my death, right? And till her death, this pension will continue. That is called joint life. After the death of both members, that 2 crore will be paid out to the nominee. Okay? So this is like both members living their life with financial security, plus also leaving large amount of money for the family as a legacy, right? So many people want to leave money or pass on some wealth to our children. So this helps you do that as well. Now let's take an example. If somebody is withdrawing it before 15 years, let's say 14 years is done. And let us, for simplicity, let us take the example of 5 crore only. And here maximum allowed withdrawal is 20%. So I am withdrawing 1 crore and 4 crore is now converted into pension. And in this case, after death of husband and wife, the family or the children will receive 4 crore of total funds. I hope this helps you understand how the exit and annuity works in NPS. Quick one on some of the fund management charges within NPS. So again, these are some changes after these change. These values are after the changes which has happened in the last 6 months. So today, overall average expense ratio, including POP and fund management, are about 0.3%. In common scheme, it works out to be about 0.29%, and in MSF scheme, it works out to be 0.3%, near about same expense ratio. And this still is the cheapest or the lowest cost retirement fund across any product that you compare. Okay. All right. So that brings us to the end of the slide, and now we can open for Q&A. Here are a couple of detail for you. If you are an individual who has NPS account or want to join NPS account or want to join corporate NPS account, please write to us at care@floater.in, the email ID at the bottom. But if you are a company or a CA firm or an outsourcing company who are exploring or want to know more about how to implement corporate NPS in one of your companies, you can directly book a meeting from this portal or write to us at corporate@floater.in. Okay, so yeah, we can open up for questions. So please type your questions in the chat room and I'll be taking it from there. So first question is about if I am part of NPS already as an individual, can I join corporate NPS with the same account? So the answer for that is that if you have an NPS account, you do not need to open a new NPS account. The same account can be converted into corporate sector. And by conversion, what it means is that you will link your account to the company. And once that is done, so whoever is the service provider for your company, you can reach out to that service provider and they will help you do that shifting from individual to corporate NPS. So for example, in a lot of companies, for example, in Floater, we do it online. But in some companies, if your company service provider is someone else, there might be some offline process also. So you should reach out to the company or your HR to help you do that. For 80 CCD 1B, tier 2 can be done or not. So please understand that any tax benefit that you get at the time of investment in NPS applies only to the tier 1 account. Tier 2 account does not have any taxation benefit at all, neither at the time of investment nor at the time of withdrawal money, because your withdrawal gain will also be taxed. Next question is about, with the 14% limit increase in the new tax regime, is corporate NPS now more beneficial than the old regime for the 30% tax bracket? Uh, See, this is very tricky question, because ultimately, if you are comparing which one is better for you, old or the new regime, please go and do your tax planning. And you cannot directly say whether after NPS 14%, whether new is good for you or old is good for you, because there are multiple deductions and exemptions available in old regime. And if you are trying to take benefit of those, then probably old regime may still be better, even if you are doing only 10% corporate NPS. So difference is only 4%, right? In old regime, you are doing 10% corporate NPS. Here you are going 14% tax break in the corporate NPS. So please do your tax planning before deciding which is better. But the good thing is that corporate NPS allows you benefit in both. Just that limit is slightly different. There is a question from Mr. Sridharan. For a retired person, is deduction allowed for NPS subscription? Question is not clear, but if as a retired person, if your earning is coming under the taxable bracket, then if you're investing in NPS in the old regime, you can still claim that benefit, right? Because in old regime, 50,000 of personal investment is still giving you tax deduction. And since you're retired, probably corporate NPS will not be something relevant for you, right? So depending on what are your other incomes, everything together, if it is taxable, NPS can still benefit you in terms of tax saving. All right. So any other questions? Please let me know. We are here for another 10 minutes. Okay. So I think we have finished on time as well. On the taxation planning, if you can write an email to care@floater.in, I will try to share a tax planner with you, which is an Excel sheet that will help you, work out your old is better or new is better, and then take a call. Okay, we have another question. At a 10 lakh CTC, does mandatory 14% NPS deduction, 1.4 lakhs per year, leave enough monthly liquidity for a young professional, other goal like ELSS and emergency fund? So, see, I think your question is about if CTC is 10 lakhs per annum. Now, first of all, if CTC is 10 lakhs per annum, then you may not need to invest in a corporate NPS, because from a taxation point of view, you may want to still invest in NPS from a retirement planning point of view, because your income itself is not taxable. So there is nothing called tax benefit for you through NPS, right? Because if 10 lakhs is the CTC, 5 lakhs is your basic. So you are eligible for 14% of that 5 lakhs as a corporate NPS. So you may still invest, right? Because that will still leave you a lot of margin to invest for other financial goal also. And it is never a good idea that you invest all your saving in a retirement plan, because there are multiple goals also which you need to plan. So complete financial planning is very important. Vesting time in is 15 years, means it is mandatory to invest for 15 years. So Mr. Anil, the vesting period does not really say that you have to mandatorily invest for 15 years. It only conveys that if you invest for 15 years, then your withdrawal and exit is much more investor friendly than when you do it before 15 years, right? And every year mandatory investment in NPS is also not required, not there. That means, let us say you invest today at the time of account opening, let us say you invest 1 lakh in a 1 year as corporate NPS. In future, the only mandatory requirement is 1000 rupees every year in your NPS account. So if for any reason every year for 15 years you are may not be able to invest large amount of money, that is perfectly okay. You take a decision based on your other financial obligations. But if you have savings and you are planning to invest for retirement, maybe it will be very sensible for you to do regular investment in NPS, either through personal investment or through corporate investment. Because if you do corporate investment, it also builds a very good discipline for you. Because once you become part of it, you get used to your take home, which is the final take home after investment, right? Plus you are saving tax also if you are taxable. I think I've answered all the questions till now. Please, you can add your more questions. Any more questions related to NPS as a product or im- implementation of corporate NPS? Okay, we are anyway still have time. So how about in new regime, the NPS subscription? Uh, I don't think I understand this question. In new regime NPS subscription. If your point is that in new regime, how to do NPS subscription, so answer to that is process of subscribing to NPS remains same irrespective of your tax regime, because regime does not play any role in terms of how you want to implement. Plus, even corporate NPS subscription you can be part of in both the tax regime. So one important thing I will want to add, since your tax declaration window will open sometime in April, and maybe for some companies it might be in May also. So before your NPS declaration window opens and your company does not offer corporate NPS, you should talk to your HR before window opens, so that it can be implemented on time. And for that, you can check with us for more detail as well. Mr. Sridharan, if you want the tax planning Excel sheet, can you please drop an email to care@floater.in, because we do not have your contact detail. Yeah, so once we receive your email, we'll be sharing it out sometime next week. Anybody who is looking for tax planning sheet, please drop an email to care@floater. So I see a few more questions. What if middle we stop? So that is the beauty of corporate NPS, that if you are part of corporate NPS and let us say you join in the month of April and later in the year you want to stop it. So you can reach out to your HR payroll team for showing your interest to stop it. And in more likelihood, the company will help you to stop it as well. So there is no mandate that you have to continue doing corporate investment if you have become part of it once. Okay, so it can be either without because your funds are less, you are struggling with money, or maybe so okay, if you leave the job, so let us say today you are working in a company, you joined corporate NPS, and after 6 months you quit, and maybe you're out of job, or maybe you join another company who does not offer corporate NPS, right? So in both cases, your corporate investment will automatically stop, and for your personal investment, you can anyway do it anytime. So there is nothing like if you leave the job, how will corporate investment continue? It will stop automatic. And if you want to be part of corporate NPS once again, then you join the new company and check with your new company how to join corporate NPS, and you can again join and continue. Same account will be shifted to the next company NPS also. So you remain in the same NPS account and keep moving from one company to other the way you do with PF account. Okay, so that is similar. Anybody has more questions? Please, I'll be here for another few minutes because our time is also 12:30 now. So we'll be stopping the webinar in few minutes. Yeah, so please take note of the contact email IDs, and we'll be happy to connect with you later on. So next question is, can we claim employee contribution deduction in new tax regime? Answer is that new tax regime does not allow any kind of tax exemption or deductions for personal investment in NPS. And that is also one of the reason that if you are doing personal investment in NPS and you are part of the new regime, you better join corporate NPS and let the same money get invested through the corporate model so that you save tax also. Yes, you have dropped an email to us for the tax planner. We'll be sending it to you. Don't worry. We'll be sending it to you by Monday. Okay. So we'll probably collect all the interested people and send it all of them together. Yeah, I think the question is about whether the 50,000 investment, personally investment in NPS will be exempted. So that 50,000 personal investment in NPS is exempted only in the old regime, not in the new regime. So old regime allows personal investment exemption also and corporate investment exemption also. But in the new regime, only the corporate investment is exempted. All right, so with that, we have come to an end. Thanks everyone who joined. I hope this was pretty useful for you to understand how the NPS and corporate NPS works. We'll be happy to connect with you later on. The video will be on YouTube anyway, so you can refer it in future for any kind of doubts or something that you have not understood right now. Okay, thank you very much. See you all.
थैंक यू सर। बहुत बढ़िया सेशन रहा सर आपका।